Today's national accounts confirm that the Australian economy has grown in the June quarter ahead of market expectations. The Australian economy is strong. The Australian economy's fundamentals are sound. The Australian economy is resilient, and the Australian economy will bounce back once restrictions are eased. Real GDP grew by 0.7% in the June quarter, to be 9.6% higher through the year, the strongest through the year rate on record. Growth was stronger than market expectations and ahead of what was forecast at budget. Australia's economy is now 1.6% above its pre-pandemic level, with our recovery continuing to lead the pack ahead of any major advanced economy. Of course, these numbers will be little comfort to many of our fellow Australians who are doing it tough right now in lockdown. Lockdowns that are having significant impacts on not just the economy, but on their well-being as well. But with strong progress on the vaccine rollout, there is light at the end of the tunnel. And today's national accounts provides confidence that our recovery will get back underway once restrictions are eased. 29 days out of the June quarter saw at least one part of our country in lockdown, including, at various stages, our 4 largest states. Despite these challenges in these accounts, we see growth in domestic demand, with household consumption, business investment, dwelling investment and new public final demand all contributing to economic growth supported by our economic plan. This was, however, partially offset by a decline in net exports due to weather-related disruptions and a detraction from inventories. Household consumption increased by 1.1% in the June quarter, contributing 0.6 percentage points to GDP to be up 15.4% through the year. Consumption increased in 12 out of 17 categories, with continued strength in the consumption of services such as transport services and hotels, cafes and restaurants as restrictions eased. We can continue to see the positive impacts of the government's incentives for investment as we extended and expanded the instant asset write-off, a key part of our economic plan. New business investment rose by 2.3% in the June quarter, with continued growth and strength in new machinery and equipment investment, which increased 2.4% to be 19.5% higher through the year. Since the October budget, investment in new machinery and equipment has increased 22.4%. This is the strongest period of growth since December 2002, as firms take advantage of the government's immediate expensing and loss carryback measures. Dwelling investment grew by 1.7% in the June quarter, which continues to be supported by record low interest rates, strong household savings, and the government's home builder scheme. The pipeline of residential construction will continue to support demand, with around 151,000 private house approvals made over the year to July 2021. New public final demand increased by 1.9% in the quarter, supported by the government's record infrastructure investment pipeline. After a strong result in March, inventories detracted 0.2 percentage points from growth. Export volumes were hampered by decreases in mining export volumes, driven by supply disruptions and severe weather conditions, while services trade continues to be impacted by international border closures. Despite the fall in export volumes, the trade surplus increased to a record high in the June quarter, which saw iron ore prices reach record highs. This has helped see a record run of 9 consecutive current account surpluses, the longest consecutive period of current account surpluses on record. We've also continued to see the rural sector benefit from favourable conditions, with farm GDP growing by 1.5% in the June quarter to be 48.3% higher than in the June quarter last year. Turning to the income side of the accounts, compensation of employees, which is the measure of the National Wages Bill, increased by 1.3% in the quarter to be 6.8% higher over the year. This was the strongest through-the-year rate in the Wages Bill since March 2012. Almost 115,000 jobs were created in the June quarter, with the unemployment rate falling to below its pre-pandemic level ahead of our budget forecasts. Household gross disposable income continues to be supported by the government's tax relief, with a further $3.8 billion flowing to more than 11 million individuals in the June quarter 2021. This has helped to boost household balance sheets, with household disposable income being 6% higher than the pre-COVID levels. Importantly, the household savings ratio declined from 11.6% to 9.7%, though it still remains at an elevated level. Company profits increased during the quarter, reflecting record iron ore prices. However, outside the mining sector, profits were softer. Nominal GDP growth, which as you know is important to the budget bottom line, was strong. For the financial year, it increased by 4.1%, ahead of the budget forecast of 3.75%. What these numbers show is that our economy remains remarkably resilient even in the face of repeated lockdowns. Today's numbers should give Australians confidence, despite the difficulties that we face, that our economy will bounce back once restrictions ease. Our labour market remains strong, with unemployment at a 12-year low. Economic support continues to flow to those in need through our COVID disaster payment and our business support packages. Measures announced in the recent budgets, like home builder, income tax relief and immediate expensing, are having their desired impact. Australia has maintained its AAA credit rating. Household and business balance sheets have accumulated $290 billion that was not there at the start of the pandemic. And now Australia has a plan to reopen up once vaccination rates reach 70 to 80%. We must stick to that plan, and as business leaders said publicly and openly today, we must stay the course. The vaccination program has gathered real momentum. As Australians recognise that we cannot eliminate the virus, we must learn to live with it in a COVID-safe way. Today's national account numbers do not change the fact that our economy has some very difficult days ahead. But today's national account numbers underline the fact that our economy remains resilient, that its fundamentals remain sound, that our economy remains strong, and that we are in a position to bounce back strongly as an economy and as a country when lockdowns come to an end.